Testing, 1, 2, 3. Hello there, traders. Welcome on this Monday, 3rd of October to my Monday week ahead webinar. Now, I hope you guys have had a good weekend and a restful one, especially because we have got a very, very busy week ahead of us. And before I share my screen, I would like to go through with you, as promised, every Monday, we go through the whole happenings or economic situation, news, breakouts, and various other things on a Monday before we actually start the trend analysis as well as the technical analysis. So let's get a start. My name is Kenny Simon, and today is the 3rd of October, 2022, and we've got loads to share with you because of volatility is expected, liquidity is expected as well. So loads of trading opportunities. With trading opportunities comes a lot of volatility that has actually driven it, so comes with risk as well. So let's get going in understanding the market sentiments driven by the latest breakout news and all the economic data releases that are going to be happening or being released for this whole week from today, the 3rd of October, 2022. All right, let's get a start, guys. Now, guys and girls, now this week sees the latest Australian, excuse me, the latest Australian central bank decision, along with the monthly jobs report in the US. Now, other key data includes the monthly US ISM, which is the industrial manufacturing index, and the non-manufacturing reports as well. So UK corporate reports does actually include the JD Wetherspoon company and first half figures from Tesco as well. So let's start off with today, the 3rd of October, what's in store in terms of medium to high impact news. Now, we're only expecting at 3 p.m. US ISM manufacturing for September index that will actually be released, and usually the markets to watch are USD crosses. Now, with USD crosses, of course, we want to look at precious metal like gold as well. We want to look at whether or not it has communicated some risk sentiments, risk appetite by traders and investors as well as a means of safe haven. So sometimes when it comes to this time around of trading the USD or, with all the events that are actually happening at this moment of time, which I will brief you guys on what's been happening. Huge, big news in the UK and various other things, crashes in the housing market and various other things are actually happening. So the dynamics have actually changed as well from crosses that we will actually be trading and picking as of today as well. All right, so that's for today, Monday, the 3rd of October. Now, tomorrow, Tuesday, 4th of October, we've got the Royal Bank of Australia's rate decisions. We've got rates to rise by 50 points as well to 2.85%. So this is what's expected. So the market to watch, of course, AUD crosses. Now, like how I have actually been guiding traders, mentoring traders as well, we don't actually just focus on that one particular cross of AUD, because AUD ties up as well very well or positively correlated with what goes on in China and the Chinese economic situation, Chinese data as well would then positively correlate with AUD crosses as well as NZD crosses or the New Zealand dollar crosses. So with that, we are also looking at the possibility of tying in with the other commodity currencies. So if you guys can remember, the other commodity currencies are the ZAR, your South African rand, as well as your Canadian dollar. That has some tie in, not as much as before, with the oil's prices as well, or the oil's current movements in the market. Now we'll move on to Wednesday, the day after tomorrow, which is the 5th of October. We've got the US ADP report. Now that's the automated jobs report before the NFP, non-farm payroll. So that's an automated version that comes up every Wednesday before the first Friday of every month. So the first Friday of every month, which is this Friday, will actually give us the ability to ride along the waves and trade the NFP, which stands for the non-farm payroll. But Wednesday, the 5th of October, we have got the US ADP report that basically gives a little bit of a hint of what could go on the NFP day on Friday. Okay, so with that, we are also looking at markets involving the US indices as well as the US crosses or USD crosses to watch for. Now, we also have the US EIA crude oil inventories. Basically, stockpiles have actually fell by 2.4 million barrels in the preceding week. So we have got supply dropping, and if demand increases and supply drops, that basically will encourage the price of oil to basically go up or be bullish. Now, the markets to watch, of course, are both Brent and the WTI of the US. Now, we'll move on to Thursday, the 6th of October. We have got the UK's construction PMI, and that is for September, and the index to fall to 49 points. That's been expected. So markets to watch. Definitely GBP crosses. We're going to be talking a lot about what's going on in the UK at this moment of time. Could possibly be a trigger of all the other markets as well. There are repairing conditions at this moment of time to prevent the housing market from collapsing as well. But we have got the Prime Minister have actually just announced some very important information that I will then share it with you as we go along. Now, at 1:30 p.m., we've got the U.S. initial jobless claims. As this is still on Thursday, the 6th of October. We've got it for the week end of the 1st of October, basically the initial jobless claims, and the claims to rise to 196,000 jobless claims. So that is giving us a little bit of a hint of how we would actually be facing a little bit of a negativity in terms of the jobless claims, that basically unemployment is rising as well. So that is the reflection of the numbers that we are actually expecting for October. Okay, so at 3 p.m. we've got Canada's IVEY or IVPMI for September. Now it is expected for the index to fall to 55, so there's a bit of a bearishness expected. Markets to watch, of course, is are the CAD crosses, and CAD crosses ties in with other commodity currencies, as we have mentioned before. So we've got the AUD to watch for as well. Usually it's sort of rattle the whole market with commodity currencies as a whole as well. Okay, so there we go. And then we go on to Friday, which is a very, very busy, I mean, the first Friday of the month spells out for the US non-farm payroll, one of the most important, highly volatile day of the entire month. First Friday of every month, usually it will be announced, which is also known as the NFP, that stands for the non-farm payroll. This is for September's figures or data. Now, job growth to be 250K, that is what it's been expected. Basically a fall from 315,000 a month earlier or the prior month. Now, unemployment rate to hold at 3.7%. Hourly earnings to rise by 0.3% month on month and 5.2% year on year. So the markets to watch, of course, USD crosses, US as a whole, all the data, basically all financial instruments revolving in the States as well. It all has its ripple effect, but it is our duty and responsibility to guide you through and mentor you through on what to pick or cherry pick instruments that would actually be moved by the big boys as of today, and for us to actually ride the waves on bagging in some pips for the whole week. All right, and after that, we have got a little bit later, we've got the employment reports comes out from Canada as well. So the unemployment rate to fall to 5.8%, but job numbers is expected to fall by 50,000 jobs. Okay, so markets to watch, of course, CAD crosses. And as I've mentioned, when we talk about CAD crosses, we want to also monitor other commodity currencies like the AUD, which is Australian dollar, the New Zealand dollar, the ZAR, South African rand as well. Okay, so that's basically it for the economic agenda for this whole week, for the week starting October the 3rd, 2022. Now, on to some very big breaking news, as I've actually mentioned and started to pass on the news on all social medias and on my groups as well, on a potential housing market collapse in the UK. This is what's been going on as of last week, because we have followed through the very big decision on the new Prime Minister of the UK, cutting the taxes by I think it was about 65 billion pounds or so. Now today, what have actually happened as of this morning when market opened in Asia, we had the UK Prime Minister Liz Truss. She admitted to have made a mistake in communicating economic plan. So I don't know how that is possible, but this is rocking the whole market at this moment of time. Of course, we have had the news that a housing collapse would actually happen. It could possibly still happen or not happen, but we have got a lot of shake in the economy, and for the new Prime Minister to actually handle a lot more. So it's creating a lot of negative sentiments, fears as well. So there are areas to watch out for in terms of whether or not we are going through a bearish stand for the GBP or the pound crosses. We will take a look at that from a technical perspective as well, matching it with the latest news that's basically been announced at this moment of time. So let's get back to the UK, because this is basically the biggest thing that I will be monitoring, researching the market and finding opportunities on what instruments to trade, but also to ride along this whole calamity, this whole what do you call that, crisis that has actually been moving around at this moment of time from the UK, triggered by the UK. It will impact the pension funds. It will actually impact the currency, of course, and the housing market in particular. So let's get to that. Now, Prime Minister Liz Truss basically Liz Truss' announcement of the UK's biggest tax cut plan in decades sent the pound to a new low against the dollar. So that was what have happened since Thursday last week, but before that as well, a couple of days before or the week before, that's basically been how the market have actually reacted to the Prime Minister's announcements. So then we are getting to S&P that actually mentioned that the government's proposed measures could weaken the UK's fiscal position because they might raise government borrowing costs. So this is basically what's have happened. Now, we all know that we've got this inflation going on. Now, inflation is basically a very natural occurrence depending on your rising demand and then your lower supply. But when the current economy or a country has got financial, or we call it systemic, instability as well, which is basically what's going on at this moment of time, then we have got a far further more complex situation economically. Because when you're dealing with inflation without financial instability or systemic instability, it's a different scenario. It could actually be a little bit more straightforward in a way whereby the governments could actually come up with the traditional tools of using it. But right now, because of the presence of a systemic risk and a systemic instability or financial instability in the UK, which they have just found out, it just basically popped up on Thursday. So because it popped up on Thursday last week, hence the reason all these the whole market in the UK especially could be the one blamed for all the other markets to be impacted as well, if they have not actually been dealing with it, or will deal with it in a more systematic way, or maybe to use tools that they've not used before, or to basically customize certain tools to actually cushion it. So right now they've got a strategy, I think, because they have actually just announced a mistake, and then they come up with loads of areas to actually announce it to the public that they are taking care of it. They are actually cushioning the impact of a direct housing market crash in the UK. So I think it would eventually still have to happen where it's in recession mode anyway in the whole of UK. So they've already announced that they've entered into a recession already as of last week or a week and a half ago, and then confirming that just a couple of days ago as well, together with the announcements on Thursday. And now we are, getting more information and more more mixes of sentiments as well in the feelings of the market. But we'll take you through to the charts, and then we'll look into GBP crosses and how it fares as well, and then plan ahead for that. Okay, so this is where the UK's fiscal position, as I've mentioned, because they might raise government borrowing cost, and basically this will make it harder for the country to tame inflation. So in some way or another, they're in a very trapped situation, no matter what tools they're actually going to apply or have been actually applying, because it's rather too late already for the effect that has actually gone on. So at the same time, S&P affirmed the UK's AA credit rating as well. So we've got a lot of mixed messages coming out from various sources as well. So we'll get on to more news, and I think I've got more at the very bottom, or that's basically it for the fundamental side of it. Now, we've got loads of questions as well about the current GBP USD trade ideas, signals that I've actually sent through. So I think it's probably about time for us to go on to the 10 Academies platform as well, just to get a little bit of an idea of news that has actually been released, just so that we're on the fundamental side of it. So sterling rises, I think we have got, we need to mute. I need to mute the, Andres, if you can help me to mute. Okay, yes, I think, yes. All right, now we've got it muted. That's great. Okay, so there was a dog just saying good morning to all of us. So that's basically it. Okay, good. So now we are looking at all the sources of headlines or news headline from Forex Mirror. As you can see, focus has been on sterling rises on the PM Truss's U-turn rumor. So that's what's going on at this moment of time. She's communicated her mistake, and then we've got all these comments from various other heads or big boys, and then all these will get marinated into the news today. But what I like about it is not the direction that it will actually go, it's the volatility, because the direction and the clarity of trend would actually be up to us to actually analyze it, balancing between fundamental analysis and matching that up with your technical analysis. So this is what I'm going to be helping you do, is to use the tools that we have on the 10 Academies platform as well, in order for us to have a better understanding of the market analysis, the trend, and then to pick the right pair for us to trade today. Okay, so we've got sterling there. We've got the Japan's PMI manufacturing finalized at 50.8 weakness. So we've got weakness happening in Japan at this moment of time. We've got Japanese business outlook on manufacturing also expected to drop from 9 to 8, below the expectation of 1.1. So that is just giving us all these hints that the Japanese economy is pulling down the JPY, Japanese yen crosses as well. Now, the Japanese yen, if it is actually experiencing loads of interest in selling off the Japanese yen, that basically could communicate to us a risk-on environment, not a risk-off environment. So a risk-on environment would then also give us the hint that the USD would continue to go up, and the rise of USD or USD crosses to go up and up would actually then be a very, very detrimental effect on, especially on our Asian counterparts or Asian countries in particular that are also relying on the US as their import-export trade partners. So that would actually be giving us all these little dots that we can actually connect to understand that it could possibly be, as I've mentioned, a risk-on environment. So that means they're turning on, not off, their risk appetite. So we have got from uncertainty to greed factor coming in for more buying interest of the other non-safe haven currencies. So we've got the safe haven currencies and safe haven assets like the JPY and the CHF on the currency side of it. And we have got gold, of course, precious metal and all that on the precious metal side of it, gold and silver especially. Okay, so there's no concentration on that, on these safe havens at this moment of time. So basically, it's a risk-on environment as opposed to a risk-off environment. Now, the GBP also has got a very big correlation for the past 1 year now with gold's movement. So that is where I sometimes uses the movements or the current situation that goes on in the UK as a means of a detection, light signal approach in understanding whether or not we have got movements and interest in gold as well, because there's a positive correlation between gold's movements, as I've mentioned, with what goes on in the UK that impacts its asset classes, impacts its economy, and various other things. They've got a positive correlation between the two. Okay, so there you go. Now we have got here, they're still talking a lot about, we've got these 3 boxes here about Japan. BOJ stands for Bank of Japan. It says here as well that we've got an upside risk of inflation to be examined humbly and without any risk and stuff like that. As it's mentioned here, consumer prices deviating significantly upward from the baseline scenario, including the impact of foreign exchange rates. So this is all on Japan. We talked a little bit about the pound, the UK, now Japan. We have got also a lot of interest on Euro USD. It says that it recovers but faces an uphill task. So we want to look at all these reversal angles as well. Technically, we'll talk a lot about that. But we have also got recession fears growing in Europe. That's the big headline since a couple of days ago last week, and that still basically is very much alive, that kind of headlines in the whole of Europe at this moment of time. Okay, so that's basically it on the news side of it. Now, what I would like to help you do is just to have a bit of a bird's eye view using this tool that we call it the Forex heat map. Now, this Forex heat map is available on 10.academy. You can always register on it. But this is where I would actually do and conduct all my technical and fundamental, especially my fundamental analysis, not technical. Technical, we go on to the 10 trade platform, the MT4 and the MT5 platform, usually to actually conduct that analysis. Is the MT5 that we conduct the analysis of on the technical side of it. So before we get into the technical analysis, we'll get to the trend analysis. But before the trend analysis, technically, it's probably best for us to keep it simple in terms of using a heat map to give us a little bit of an idea. Now, this is a heat map. A Forex heat map basically gives us the idea of a trend overall for currencies. Now, we've got all these currencies on the left. So what we would like to do is to look at horizontally whether we have got it highlighted all in one color, whether it's the red or the green. Like, for example, on the NZD right here, it's got the most highlighted green boxes. The green signals bullishness, red signal bearishness. So what that means is that we look at the horizontal coverage of all these boxes, which one horizontally has got most green, all green boxes or all red boxes. The unhighlighted one basically is just not moving yet. The market is just, not moving or change. The changes did not actually occur in terms of its percentage points or price points. Now, when we see the ones that are highlighted, then we can see that that's got a bit of a steady type movement. It's all green. So there's bullishness. NZD versus the other currencies has got bullishness. So what that means is NZD at this moment of time has got a lot of movement in the market, right? And it's got the highest number here is 1.15% right there, and that is versus the JPY. So this is probably a good pair to conduct a further trend analysis on. So we know now that NZD is bullish compared to the majority of the other currencies, including the euro, the USD as well, and then right to the CHF. So The NZD at this moment of time, according to the Forex heat map at this moment of time, is actually very much bullish against the euro, the USD, the JPY, the GBP, and the CHF. So we need to also look into the economic calendar, take a look at what we are actually expecting on data coming from New Zealand, if any. If not, it could actually be a sort of a connection or correlation with the Australian dollar, as well as what's been going on in China as well, because both New Zealand and Australia are the biggest trade partner for China, or with China. So they've got a triangular type trade connection between them. So they've got a positive sort of correlation between their economies. Okay, so there you go. Now we are looking at the other ones as well. We have got the JPY here very clearly. It's bearish, it's all red, and we've got 4 highlighted boxes here, but the steadiest one right here is this bigger number right here. So JPY again versus the NZD. So NZD JPY is probably good for us to just monitor and look at whether or not we have got a clear and smooth trend technically first, before we look at it as a trading opportunity. So a little bit too soon if we want to just jump straight into the technical analysis before we actually look at the heat map or the top movers, and then to also match up with what's going on in the news side of it. Okay, so when we're actually looking at euro, for example, again, it's very bearish against the NZD. So here, when we are looking at all the row under NZD, we could see that the currencies on the left, this is how we start off with the heat map, is to look at the currencies on the left, right? So all the currencies on the left are seen to be either moderately or strongly bearish against the NZD, which basically means NZD is the most bullish ones compared to the other currencies at this moment of time. Okay, let's also look at GBP, since we have got loads of movements in GBP, and there was a bit of a turnaround with prices going upwards, and this is where I want to point out, especially for GBP USD, because I've laid out all the selling signals for GBP USD as well. But then we have got this spike upwards. So what do we actually do? Where are the resistance levels? What are our next plan of action, and various other things will be explained to you based on the charts. Okay, so with NZD, we need to also talk about AUD, and you can see that you've got that positive correlation going on right there. It's reasonably high with CHF together with, we have got AUD right there. We've got NZD versus the CHF, reasonably high on the bullish side of it. But Australian dollar, on Australian dollar, we have got bullishness of the Australian dollar against the USD, against the JPY, as you can see, and also the CHF. Now, this is quite interesting because we have got AUD moderate to strongly bullish against safe havens, which are the JPY and the CHF. Again, that would also confirm the risk on, not the risk off type sentiments in the market. Okay, so when there is a risk on environment, there may actually be less interest, less buying power on safe havens, including gold. So we want to also confirm and look at gold's trend, whether or not it's to the downside, as what we can actually see, not on the upside, mainly because of the interest from the traders and investors are more towards a risk-on type sentiment. So they're not interested in buying safe havens or transferring their assets at this moment of time, as of today, into safe havens. It doesn't look that way because we actually have got all the bearishness on safe havens. For example, JPY, you could see it's a red across. So it's got a lot of selling pressure on the JPY, which is one of the safe havens. We've got these other safe haven in the European vicinity of the market. That is the CHF, which basically is a Swiss franc. We've got negative right there as well. And that basically does give us a little bit of a sort of a hint as well. Now, USD is also a safe haven, especially during the pandemic time. It's turned itself into a safe haven type currency and all the crosses as well. So there you go. We've got bearishness right there as well. Got bearishness all across from JPY as well. We've got bullishness on NZD, CAD, AUD. Now, this is also very interesting. We've got bullishness on CAD, AUD, NZD. All three of them are commodity currencies, has got commodities in their countries to export. And we've got loads of imports from all other countries buying minerals and various other commodities from Australia, Canada, and New Zealand. Of course, Canada more onto the oil side of it, Australia and New Zealand more on the rare earth, minerals, and various others, especially copper and all that's been bought by the Chinese to manufacture goods, and then they send back the finished goods back to Australia and New Zealand for them to be sold. So we have got a cluster of information right now that can actually be looked at as a whole, as a sort of connectivity with what we are going to expect as a forecast. So there you go. We've got an overall sort of picture. But what I would like to do right now is take you through to the MT5 platform so we can actually then conduct a trend analysis. Okay, so we've got an idea here on the heat map, and we can pick and choose between the weak and strong currencies, or vice versa, in order for us to do, firstly, a trend analysis, not a technical analysis straight away. We need to do a trend analysis first before we conduct a technical analysis to confirm on knowing where to enter and when to exit. That comes later on after the trend analysis. So let's get to the 10Trade platform right here. I've also sent the trade signals, and also got one of my TP got hit for GBP USD as well. As you guys can see, it's on a live account right here on 10.trade. And this is the MT5 real account, and you could see that I've gained on AUD JPY last week. We've got a little bit of a loss where it hit the SL for AUD JPY, but I sort of recovered it a little bit, half of it. So it's half and half loss and profit for the AUD JPY, because one was on a sell and one was on a buy. So the one that was on a buy benefited. But let's talk about GBP USD. So as you guys know, I have alerted everyone in the weekend about what could possibly be expected for a very bearish market for GBP crosses. But of course, we maybe have experienced the spike upwards because of the sudden change of game plan in the UK by the Prime Minister admitting her mistakes, and then maybe a strategy to calm down the market a little bit. But the overall trend is what matters at this moment of time, because we've got the pension funds getting impacted. We've got a lot of bond buying from the States by the UK. So that is still going on, and this is going to be quite impactful to the market overall as well. Current economic situation, together with all the sentiments of fears about pension funds especially, and the potential crash of the market in housing in the UK because of all the mistakes that they have actually done. So the mistakes have been done, has been applied into the markets, already happening in the market. So let's take a look at GBP versus the dollar, okay? Just so that you guys get an idea where we can actually match with what's going on fundamentally with technicals. Now, we've got this spike here because of what has actually happened in the news with the Prime Minister, as I've mentioned, has actually admitted her mistake, and then he's got a lot of consolation basically with the market from the UK's big boys, and the big people have actually tried to cushion things. But as we can actually see, I've benefited in the trade right here on the sell. So I've made about 30 pips or so on that one there. And I've also laid out quite a number of, give me a second, not sure. So that actually been marked where I have actually gained on the sell. And then that selling basically saved me quite a lot from doing that sell in accordance to psychological numbers. So you guys will get all these videos that I will be creating very soon on psychological numbers. And psychological numbers, if you use it correctly, you could actually cut your risk by 50%, especially in entering and exiting the market. So here, for example, if I have not applied my exit based on the psychological numbers, I would have been taken out right there, and then it wouldn't actually be a profitable trade. But it was a profitable trade. I was just testing it on a very small lot size, and that basically benefited a lot. So we have got a little bit of a, I would say, let's just measure. This is on a 1 hour chart. We've got that spike of an upward move. We were all expecting, oh, you know, big crash and stuff like that. So it's just going to crash. Now, it doesn't actually always work that way. It takes time for the market, especially on a Monday, to marinate information, because a lot of traders and investors out there are quite unaware of what has actually happened in the UK, because it was just announced over the weekend. And the new thing about financial instability just got announced as of Friday, and it just popped up, you see. So that financial instability popped up together with inflationary mode. That's basically where the risk is coming from off the market. Now, in my opinion, I've got levels that I need for the GBP to actually sort of get more and more bearish in order for us to confirm that, yes, it's going to fall much more. But you see all these laid out selling pressures, selling trade ideas or signals that I've laid out here. You know, we've got 100 pips potential, for example, 100 pips here and 70 pips there. It does not mean for every one trade signal you need to get that whole 100 pips. No, you can actually reduce your risk by taking 20 to 30 pips per time until you reach that 100 pips, so that if at all it actually you know, eats you up or, you know, stop you out in the market, at least you are actually being stopped out only with that reasonable amount of pips that you have actually measured in accordance to your own risk appetite, as opposed to just you know, having the TP exactly at 100 pips. I'm just talking about the potential there, but it's probably best for us to take that in stages. This is what I've actually done as well myself, is to not actually aim at that 100 pips, but, you know, I sold at that same area, and then I basically took about 20 to 30 pips or so, and that basically gave me that profit of 66.60. I was trading at 0.10, if I'm not mistaken. Yeah, right there. So it's a dollar per pip right there. So it's about yeah, I think $1 or yes, and that basically benefited me quite a bit. So that's the profit there at 66.60, and you can see that it hit my TP there at 1.1090. So I've not taken it right down to 1.1060, for example. I took it up a little bit more because I wanted to take a little bit of profit and pips on the 20 to 30 pips scale. So I took the profit there above the 1.1080. So everything will be explained to you in my videos. I've got all the videos, self-paced learning, to help you understand all this thing about psychological numbers. How do you enter? How do you exit? What are they? And how do you actually apply them? So everything would actually be very, very clear for you to follow. So I've got that that take profit right there. It's really good. So now most of the traders out there would like to know, what do we do? What on earth do we actually do on GBP USD trades at this moment of time? Now, what I can say is that we need to do a trend analysis to get an idea of this GBP USD first, right? And then we'll get to the other pairs and get to do some nice trend analysis before we plan for the whole week on which one to actually enter. We need to keep calm. Don't get don't get too excited with all these sudden movements up or sudden movement down, because it's just the nature of the market. We've got sparks and spikes going on, mainly sparked off and triggered by all these happenings, and then basically it's like the washing machine, it spins all these news and then it creates a lot of confusion for traders. And hence the reason for our existence here at Bretton Academy, together with Ten Academy, to keep you on the right track of mindset first, as well as your emotions. So we need to do the whole analysis step by step to keep our brains and mind really busy before it drops into your emotional territory. We don't want your thoughts and opinions and analysis to actually drop to the emotional territory. Okay, so here we go. Now, let's take a look and focus on GBP USD, right? So with GBP USD, I've got that sell at trade signal at 1.1170. Now it's high up there at 1.1259. But let's take a look at this bullish candle right here. So we've got that length of that bullish candle. We want to always look at mother candles. Bullish candle are significant candles. We don't have a fixed number of pips of that size of that candle, but let's take a look at this one on the 1 hour chart alone. Now, on this 1 hour chart is 150 plus pips just on the single body. So it is a very, very significant body of candle that we need to pay a lot of attention to. Now, this is a bullish candle. Basically, you've got an opening price on the 1 hour chart. It went up and up and up, and then it closed right there. So where did it actually close? Let's take a look. Close right here. So I'm going to mark that as a red line, as a potential resistance. Now, this is for GBP USD on the 1 hour chart, okay? Now, when I actually put the line, horizontal line on the closing price of that visually very strong mother candle that's worth about 150 plus pips only on the body of the candle, that is a significant candle we need to pay a lot of attention to. Now, whether it's on the 1 hour, 4 hour, or daily, we'll need to take a look at the other time frames as well when we do a trend analysis. But at this moment of time, I just want to point out the territory that we need to actually pay a lot of attention to. Okay, so I'm going to move this blue line that marks a support on the opening price of that mother candle. Now that was at, let me just check, 1.1092 area. That resistance there also coincidentally is the opening price of the next mother candle that you can see right here. See, now this is all very, very significant messages and hints on a technical side of it. Now, what does this mean? This also means that red line that is marked there based on the closing price of that long mother candle is priced at 1.1248. Now, 48 is only 2 pips away from the 50 psychological number. What does this mean? This means that there is a high possibility of prices to actually reverse very, very soon. Okay, there is a potential. Now, the reason for that technically as well is we have got all these needle-like feature from all these candles, right? These needle-like features are called the wick. The longer the wick pointing to the upside, the weaker the movement is going to be to the upside. Okay, because it doesn't have the body anymore. It's only left with the bones, you see? So we've got a wick right here and another wick right here, right? And that is also being marked at the psychological, very close to psychological level of 1.1250. So what I would do is to also mark a line at the 1.1250 psychological level. The psychological level basically means that it has an ability to actually reverse the price. So the price is on the way up and up and up, but then the psychological level and together with the resistance levels right there would most probably push down the buyers and then turn them to, for the sellers to take control. Okay, so 1.250 right there. Let me just mark. So now we've got these 2 lines almost overlapping, but it's just 2 pips away from the 50 and also the 52, right? The 48 and the 50. Okay, so we have got these 2 red lines horizontally is marking a resistance. So what that means is a price needs to break out from this to give us the hint of more bullishness. So not at this moment of time. This moment of time, it looks like there is a possibility of a reversal. Now you can see the current candle on the 1 hour chart. The current candle right here is developing that wick as well. So what does it do? It is actually messaging and alerting us that there may be weakness of the buyers to take prices upwards. So there may be a potential reversal right there. Okay, so there you go. This is basically what is happening for GBP USD. For those of you who are very worried with this whole price hike, I think it's looking like it's got more bearishness as well once it's actually reached all these resistance level. Now let's do a trend analysis right now. I've got these 3 lines, and I've shared these 3 lines, mechanics of these 3 lines. They are the 3 exponential moving average, these 3 blue lines right here, right? So they are the 50, 100, and 200 exponential moving average. These are the only indicators that I usually use. We've got chosen few for different reasons, but one for every one reason that I have. Now, this one here is for telling me the current trend, the strength and the smoothness of the current trend. Now, at this moment of time, we have got prices on the 1 hour chart above all the 3 lines. Yes, we've got some bullishness at this moment of time on the 1 hour chart. We haven't compared it with the 4 hour, daily, and so on and so forth. Okay, so we've also got, at the moment, it's trading at 1.1226. So what I would say is that on the 1 hour chart, if at all prices were to drop to the 1.1220 psychological level, another 5 or 6 pips or so, and then it goes lower than 1.1220, then we have got a good indication of sellers coming in, right? So at this moment of time, a little bit too early, but we need to also look out for support. As it drops, where could it actually reverse? We can look at this current bearish candle and mark the support based on the closing price of the body itself, right? So we've got it at the blue line right here. Yes. Okay. Yes, I think no problems. We'll get the question from John Akbo Yawu, sorry if I pronounce it wrongly. Hi John, how are you doing? Now you've asked, you've mentioned here that you profited, you had I was profitable on the GBP USD up to like 60, 70, only for me to step awake by 30 minutes time. All right, now the thing is that, John, is looks like you have actually reacted to the candle, and you have reacted to what has actually happened, but you have not reacted and planned your trade in accordance to the trend. So if you are going to be trading, just reacting technically on the candles, it would probably be very, very risky for you. So it's probably best for us to go through the trade plan and pick the right pair, and then to actually plan our trade, as opposed to looking at the candle getting longer and then it's a buy or it's a sell, and then you just react on the current movement of the market. If you're doing that, you're most probably gambling the market at that moment of time, because you're taking the risk. Basically, it's your decision to want to take the risk. There's no right or wrong for that, but in order for us to actually preserve our capital and for you to actually be able to enter trades when great trading opportunities happen, then you would need to actually follow accordingly to the trade plan, as opposed to just entering and exiting the market based on a single candle movement. So as you know, it was not a trend that actually happened. It was more a reaction of what the Prime Minister have actually announced, or what have been announced about the Prime Minister and the UK's current economy. So it was more like a spike movement. As you can see now, that it is quite clear that that upward movement is beginning to weaken. So we need to actually look at whether or not we have got lower highs, or are we actually looking at prices to pierce through 1.1250. Okay, so as it pierces through, then we might actually look into more buying opportunities, and then we look into the trend. So at this moment of time, too early to buy, to sell, in my personal opinion. Of course, as we are looking at prices at 1.1210 already, it's going lower. As you can see, the wick is getting longer to the upside. So that means it's signaling to us that the weakness is getting more and more from the buyers. The buyers are getting weaker and weaker. Okay. All right. It says John here was on it with your signal you shared on Friday and adjusted. Okay, brilliant, good. We all have to actually adjust as we are monitoring it, but what I could actually give you is the territory of buying and selling, and it will need to actually match with your individual risk appetite. Okay, so like I've mentioned earlier on, if we have got a trade signal, buy here and exit there, and it's worth about 100 pips, that is just a territory, a potential, and the trend direction. But you have to break it up. We have to break it up with 20-30 pips, per time in order to reach that, because the trend could actually change. Not the trend, but a reversal could also happen. So we need to actually, trade it in sort of like a wave, a short wave, depending on your trading capital as well as the time frame that you're most suitable for. Okay, this is very important. All right. Okay, midnight 1170. Yes, and at this moment of time, what's your plan ahead, John? I mean, your plan should actually be sticking to the trade plan, the price trade plan, for us to actually look at how we could recover that trade. If that was already at loss, you have to let that go, right? And what we have to then do is to follow the trade plan again in analyzing the market and picking the right pair according to the trend that is strongest and smoothest, and then trade again in order for us to recover that. Okay, so at this moment of time, that was a loss trade, as you have mentioned. Is that correct? Because you said with my signals, and then the signals was for a sell, but you were on a buy, was that not? Okay, no problem. What we can actually do is we, start afresh all the time. When we want to actually repair our trades, to recover, we go back to the trade plan. Always go back to the trade plan in order to understand the market, because currently there's a lot of changes already. Just within about a couple of hours, the whole plan have actually changed in a way, the market wise, because of what's been going on in the UK so far. But we are looking and monitoring on the prices on different time frame. Let's take a look at GBP USD again, and let's focus on what could we actually be doing from now on, right, for GBP USD. So as I have actually marked it, we have got the 118. Okay, let me just, right. Okay, now I've marked the support area right here as well at 1.1187. That is based on the closing price of this mother candle, bearish mother candle right here. So I want you guys to focus now on a very small area based on the 1 hour chart between the 1.1250 psychological level and also 1.1180 psychological level. Let me just add that as well. Okay, 1180. Okay, so it would be easier to follow this way, so that you are aware that the current price at 1.1206 or 07 at this moment of time is within the range of 1.1250 and 1.1180. What that means is that we are making this area right now as a range, okay, as a range. So no trading at this moment of time, mainly because it hasn't broken down out of this range or above from the top red color lines that we have put. So what I'm trying to say is only after price pierces through, let's say it comes down lower, it pierces through and go under 1.1180 and then start to come down with a stronger body of the candle, then we have got more bias to the downtrend. Then we can plan a downtrend selling type move. At this moment of time, it is in the middle of that range. Only after it breaks out 1.1250 psychological level and above, and then with the mother candle, and then we can monitor and look at the trend as well. Only then we can actually plan for further buying of the GBP USD. At this moment of time, we need time to actually just calm down a little bit and look and observe the market until it breaks out from this either one of these two levels. Now, if I compare the current trend that is going on the 1 hour chart to the 4 hour chart, you can see that it is actually trading, the price is actually trading in a uncertain type market. Why? Because the three lines, the three exponential moving averages, the 50, 100, and 200 on the 4 hour chart is just going sideways. So that means we do not have a clear, smooth trend as yet for GBP USD. Okay, now we move on to the daily chart. Now, as we move on to the daily chart, which is a longer term type chart, we can see that the signal is quite clear for the longer, medium to longer term, anywhere between 4 hours time to 1 day or 24 hours time, 4 hours to 24 hours time. We are seeing the possibility of more bearishness to take place because the signal is quite clear. The three lines are quite clear to the downside. Most of the candles are actually under all the three lines as well. Only we have a bit of a correction, of course, but that is weakening as well with the wick on the current candle on the daily chart as well. So we are seeing that, there's a possibility still. Things can change, but there's a possibility that medium to longer term are more biased to the downside. Now there's a correction going on to the upside. That's what have actually happened this morning in reaction to the news and things like that, hence the reason going up. But then when you look at 1 hour and 4 hour chart, it is signaling to us that the upward move is getting weaker. Then the medium and longer term on the daily chart onwards is still telling us that there is a possibility of more downtrend or a clearer downtrend as opposed to an uptrend for the GBP USD. I hope this is clear for you guys, okay? And then when you go on to the weekly chart, that trend to the downside for the longer term, anywhere between 24 hours to 1 week, still tells us that it is to the downside, more biased to the downside. So that's the reason why it's probably best for us to monitor what happens in the 1 hour chart and the 4 hour chart, and then to monitor that area that I have mentioned, 1.1250 and 1.1180. So 1.1250 right down to 1.1180 is your range of prices there, worth a little bit, I would say, not too much, under 100, under 60 pips or so. So anywhere between 50 to 60 pips range. But right now, it is actually very, very close to the lower lines right here. So it's only about 20 to 22 pips or so before it could potentially break out from this 1.1180. We don't know whether it breaks out or it does all this. It might even go into a sideways type mode and then start zigzagging in between this range. But this range is for you to monitor. So hence the reason it's probably best for us not to partake into GBP USD at this moment of time, because if you have taken a look at the heat map, the heat map itself has actually given us hints on NZD pairs more than the GBP pairs. We've got GBP pairs, not so many highlighted in red as well, but we've got loads of it on the NZD side of it. So hence the reason we want to use the tools as well. We want to do, look at the news, get all these news side of it, fundamental side of it, and then match it up with your technicals. But most importantly, to pick the right pair. Now, at this moment of time, do I actually pick the GBP? Not really, because, it's still marinating the news. It's still awaiting. So if you are actually getting into a GBP USD trade right now, it's exactly like putting your finger into a spinning washing machine. This is basically what it could be like, so this is basically what we need to do and not to do. Now, not to do is to get into a rush or rush yourself into just reacting into a single candle movement. That would actually be very, very risky, because there's just simply no trend at this moment of time for GBP USD. It's probably gearing towards a sideways type market. Okay, sideways means uncertainty. Upwards means a lot of greed coming in, and downward means a lot of fear, encouraging the sell-off. All right, there we go. So you could see that on the 1 hour chart, it is now building its case into becoming slightly more and more bearish. And I think if you play that through and you look at the 4 hour chart as we speak right now, it's doing the same. It's just, opening its prices on a bearish candle coming towards the downside at this moment of time. Okay, so very, very important that 1.1250 area level, right down to 1.1180 level, just to watch that area. Then we can actually make our decisions further based on what's going on in the trend strength and clarity of GBP USD. Okay, now before I end the session, it's really important for us to also monitor gold. Now, gold, I've laid out everything for you guys and girls out there on where we are looking at selling the gold. Now, the reason why I've mentioned about selling is because if you guys remember correctly, I have mentioned about a risk-on environment, not a risk-off environment. When we have got a risk-off environment, they're turning off their risk appetite, then we have got more movements coming into buying gold, buying CHF, buying JPY. These are all safe havens, for example, right? But at this moment of time, it doesn't look that way because the market, through the heat maps, through what's going on with the news, we are looking at a risk-on environment. People are wanting to be a little bit more risky. Taking the risk is their name of the game for today, from the way it looks like in the market. So it wouldn't be of any interest to put their money into safe haven like gold at this moment. So it would actually be selling much more than buying. But we have got the 1659 area to monitor. Now it is trading at just slightly above 1661 or 1662. Now, when it comes downwards and breaks out from the two purple lines, only then I think it would trigger a sell at 1658, let's say. So you can only start selling at 1658 or so, and then you can take profit at 1650. Okay, 1649 or even a little bit lower at 1646, sorry. So there you go. You can always play back this recording or just go onto YouTube, and right after this webinar ends, it will be automatically available, the recording, on my YouTube channel. Okay, so you just go on to Bretton Financial Trading Academy, or just Bretton Academy. Then you'll be able to look at my channel and just click on it, and you will see the recordings right there. Okay, so there's a bit of a selling type opportunity right there, most probably, but let's do a little bit of an analysis, trend analysis. You can see that on the daily chart, very clear downward movement, downward trend on the daily chart. When we were at the 4 hour chart, it is sort of uncertain, but it's biased to the downside, got 3 lines to the downside, but there's a little bit of a sideways type, I would say, uncertainty going on with the 3 lines moving horizontally. So we want the prices to firstly break out of 1659 and go under, then it would actually encourage further sellers to come in and participate in the selling of gold. When we are on the weekly chart, it's the same. It's still under all 3 lines, but I think from 4 hour to the daily, it's clearer. The bias is to the downside in terms of, the 3 lines and things like that. Okay. All right. There you go. Any questions, guys? Any questions at all? Any questions? All good? Okay. Yeah, that's fine. No problem. Okay. All right. Now, what I would like to do, guys, before, hi there, Peter, welcome. At this moment of time, as I've already mentioned, not yet until price confirms itself a little bit more. Let's just go back to All right. Yes. So there was a question from Peter, and Peter was asking of whether or not it's wise to trade gold at this time. Now, at this time, not just yet. The main reason is mainly because it's a risk-on environment, not a risk-off. Buying gold, and when gold goes up and the Swiss franc goes up and the Japanese yen goes up, let's say, this is the time when the risk is off, and they are putting all their assets into wanting to buy safer assets like gold. So this is not the time as of now, because a risk appetite in majority of traders and investors seems to be more a risk-on environment. So they're willing to take the risk. So to answer that question of yours, Peter, not at this moment of time. So I have actually highlighted areas that can actually be better for the selling, and that area would only be at 1,659 and below. Now the price for gold is above that level, right? So we need price to come down a little bit more until it comes down to $1,658 per ounce. So if it is 1,658, and then you see the board or you see the news and you see that it has already gone under $1,659 per ounce, and it reaches 1,658 per ounce, that could actually trigger a selling. So not buying. Why? Because this is a downtrend. When you trade CFDs, you are not owning physical gold, you are only forecasting the price. But this is the magic and wonders of CFDs, is that you can actually benefit and make money and profit from up market or down market. You just have to do the right thing. So the trend at this moment of time is most likely to the downside for gold. So if it is downside for gold and we are predicting for it to fall a lot more, we want to sell the market, not buy the market, right? So if we sell and then it drops furthermore and it hits your take profit or the area that you have predicted where it could actually fall to, then you will make that money and profit from that move. So it's a sell side. Okay, now I have got Mr. Palani, how are you doing? Welcome to my webinar. So here you have asked of GU. GU stands for GBP USD. EU, Euro USD still in more on selling pressure. That is correct. Yes. At the moment, GU, it's as I've actually mentioned, you can always watch the video as well later on again. But as of now, GBP USD is trading in a range between 1.1250 and 1.1180. If we want to know whether it will go down further, it has to break out and go below 1.1180. Then we can enter the sell at 1.1170 and below, right? But right now, no trading at all for GBP USD. It's sort of, it might not actually go up or go down, just go sideways. It might go up and go down, but sideways movement, not break out to go down or break out up to go up yet. Because at this moment of time for a Monday as well, it's quite uncertain market, it's quiet market as well. It's a little bit too soon to have a lot of information that can actually make the decision for the UK at this moment of time. So we want to wait a little bit. Now for Euro USD though, we are looking at, let me just clear out the Euro USD indicators so that we can start afresh a little bit before we end the session for today, but we'll just cover up a little bit on Euro USD. There is just a lot of mess at this moment in most of the I would say superpower of the European economy. We've got turbulence in the German market, French market, and also manufacturing side of it as well in the Italian market. So these three countries are the driving forces economically for the Eurozone. Okay, so we are looking at trend wise. Let's do a bit of a trend analysis first. We start off with a 1 hour chart, especially with Euro USD. The Euro USD, the current price right now is at 0.9798. But the problem with that is, trend wise, according to what we can see technically as well on the three lines, it's very, very unpredictable. So there's no clear trend as yet on the 1 hour chart. So that means no trade as well, because it's going to be very risky. If you compare the 1 hour chart with the 4 hour chart, on the 4 hour chart, it is still unpredictable, but the lines have actually gone down a little bit, right? And at this moment of time, it looks like the price of Euro USD is trading in within a bit of a bearish zone because it's in a bearish territory. Look at this very bearish candle, mother candle here, and another mother candle here. So if I were to mark this area, the opening price of the mother candle, opening price of that mother candle as well, and also closing price of this bearish mother candle right here, and also closing price there and there, actually it matches exactly. So we have got a range now at this moment of time. So what that means is that the price of Euro USD could actually fall, but there will be a bit of a support at 0.9752. So whatever you are doing, if you are selling the euro already right now, let's say, it's not for buying at this moment of time, but if you are already selling your Euro USD, I think it's probably better for you to exit at 0.9760 at least, and not below that, because it might actually just have a little bit of a reversal again at 0.9750 area. So the best place to exit your trade if you are already selling your Euro USD is at 0.9760. Okay, now it is at 0.9793 area. So you have got about 30 pips to make as well on the downside, possibly, but not 100% certain. But it is in that range of trading at this moment of time for Euro USD. So if you are already selling, or if you want to sell, you sell, but then make sure you exit at 0.9760. Okay, 0.9760. You've got about 20-30 pips to make on the downside, possibly, not certainly. Okay, all right, there you go, Euro USD. More question on yes, on the 4-hour, it does look like more selling pressure. Like I've said, if you are selling and thinking of selling, well and good, but make sure you exit at 0.9760 just in case, okay? Because there's a strong support right there, okay, at the 9750 area, very strong support. So you should actually exit at 0.9760. Okay, there you go. So that is for Euro USD. Now let's just take a look. Questions. What I would like to do right now, very quickly before I end it, because we're running a little bit out of time at the moment. I've got a question here from Simon Ekbedi. Do advise trading on Monday or staying aside? It does not depend on the days. It depends on the market. If the market is moved in terms of volatility by news, let's say like the UK and all that, then there are trading opportunities because there are volatility. Volatility is the lifeblood of the Forex market, especially. But then, you know, that is why we have these webinars, and just to guide us through whether or not we can actually trade it, but trade it systematically and safely as well. That's the most important thing. So it does not depend on the days. It does not depend on your style. It depends on the market. The market should be giving you the hints of whether there's high volatility. There's high volatility, high liquidity, high you know, movements, and that is basically triggered by events and things like that. So there's some fundamental fuel. If there's some fundamental fuel, there's some trading opportunities. If there are some trading opportunities driven by volatility, there's also some risk. So we need to manage the trade. But you know, we could trade any day of the week actually, but it does actually depend on how you trade it and whether or not you have managed to understand which pair to pick and their trend is clear and strong. That's the most important thing. Okay. All right. There you go. I hope I answered that correctly, or as you expect. Any questions more, just let me know. Okay. All right. John, which area did we should watch out for the sell? You're talking about Euro USD, I think. Yeah. Is that correct? Euro USD is, I mean, if you're selling now, or you can sell now, but make sure you are exiting at 0.9760. This is for Euro USD. Okay. All right, there we go. Now, I just want to take a look very quickly at one NZD pair, and it was NZD JPY that we looked at the heat map, and it's signaling a lot of selling pressure going on for NZD versus the JPY. So what I would like to do is just to look at that very quickly for 1 minute before we end the session for today. So we've got NZD JPY right here. So very quickly, let's do a bit of a trend analysis. Now, based on the 1 hour chart, it's not good, not clear trend, 3 lines pointing sideways, and the current price is sort of in the middle of the lines and things like that. So not very clear trend for NZD JPY on the 1 hour chart. So now I'm moving on to the 4 hour chart. Now, the 4 hour chart is giving us some hints that NZD is appearing more bearish from the 4 hour chart. Now there's a lot of volume of trade, a lot of traders, investors are trading the NZD JPY according to the heat map as well. We've got an increasing of traders coming in, but in the heat map is showing all the downtrend as well, or the uptrend earlier on, but now it's looking like the 4 hour chart is more biased to the downtrend. Now it is trading at 81.92. So what I would like to see is whether or not the price for NZD JPY would come lower or go lower to the 81.80 level. If it does go lower at 81.80 and then go under it, then we have got more sellers coming in. Then we can actually be more confident in selling the NZD JPY. So this is why we cannot rely on just a tool like the heat map is giving us some bullish signal, for example, or bullishness. We cannot just base on that tool and then go and click on the buy. So we need to actually mix and match with our own strategies of analyzing the market, especially on the trend side. So there are opportunities, of course, NZD JPY, but it looks like more bias to the downside now. So there may be more buying now into JPY. So that could also be a signal of risk sentiment starting to change. Maybe the risk sentiment is changing right now, where people are not buying too much anymore of risky assets. They want to now look at less risky asset or safe havens to invest on. If that is the case, then we might look into the movement of gold going up as well. All right. So if we compare now with a daily chart, it looks like from a daily chart perspective, price is quite low under the 3 lines, which basically is biased to the downside, but there's a bit of a correction going on with NZD JPY at this moment of time. But what I can see and say is that we have got resistance coming quite soon. Based on a daily chart, we've got resistance at 82.50 psychological level. Now we're trading at 81.90s area. So it looks like we've got about 50 to 70 pips more to go up before it actually reverses and change the trend possibly for NZD JPY. So at this moment of time, still to the upside, but limited anywhere between 30 to 50 pips to make it safer, because I can see that we have got resistance right there on 82.53, as I've mentioned, and also 82.64. And this is based on the candles, mother candles, opening price on the daily chart. That gave me that resistance area right there. So I'll just do that. Okay, guys, any more questions, guys and girls? Any questions at all before we end the session for today? I hope that's been useful. No questions? All right, guys. Any questions at all after we've ended, you can always comment on YouTube channel as well. So let me just show you where. Yes, sure. We've got questions. We can answer them very quickly. Okay, perfect. Let me show you guys on the YouTube channel. It is called Bretton. Okay, my channel is called the Bretton Financial Trading. So we have got Bretton Financial Trading Academy. Just type that on YouTube. You'll go onto my channel and you can click onto the video section. Right after this webinar, when I've ended it, you'll find the now you can see it's live, right? And then once I've ended it, you've got it as your recording almost immediately. Now we've got a question right here from a.k.a. Jacob. Sir, can you do a quick analysis on NZD Okay, we've done an NZD-JPY already, so I hope that could actually cover your question. We've done it already on the NZD-JPY, giving you a potential buy at this moment of time, but you need to exit at 82.40. Okay, so if you are already buying NZD-JPY at this moment of time, it's more of a buy opportunity at this moment of time, but it is now priced at 81.95 or so. If you would like to be a little bit safer in your buy, maybe you should buy only at 82.10, and then you can exit at 82.40. That's a 30 pips potential. Okay. I hope that is actually a quick enough an analysis for you on an NZD pair, which is NZD-JPY. Okay, thank you. All right, that's basically it of the time that I have for you guys, unfortunately, everyone. So no more questions, I guess, but if you guys have questions, I would encourage you guys to, when you click onto the video, and you can actually comment on the video itself, okay, and create a thread there. Everybody can ask questions there, and I will also go into it to basically answer them right there. Okay, so we have got the questions section right there. You can always just click on to comment and start making comments and ask your questions there itself on the YouTube channel. So here I could actually see comments right there as well. So that's brilliant. Good. Okay, guys, that's all I have for you all, and thank you very much. And like I've mentioned, do visit the Bretton channel right here, because you can also watch on all the previous videos. So it's called the Bretton Financial Trading Academy channel, and when you type it on the YouTube, you should be able to find it. If not, just ask us, and we'll be sending you the link as well. All right, guys, thank you very much. And wishing you all a great week ahead, and we shall meet again on Wednesday's midweek review. Take care.